There's a couple of things that I just wanted to talk about today, and some of them are going to be sort of commonsensical, but interesting to hear them because sometimes people forget common sense, and there's some trends we can see in SME finance that are of interest. And I'm going to finish up with how you give your application the best chance of succeeding, because that's when people are looking for money, that's the most important thing for them. I think one of the things that we're seeing in linked finance at the moment is certainly there's a bit of a crossroads coming up for people. The economy has done very well over the last 6 months, but certainly there's a couple of significant headwinds that are coming our way. We can see interest rates increasing, and the banks, the dastardly guys over in Bank of Ireland there, are already increasing their interest rates. We, by contrast, have fixed rates, so we're your friend when it comes to interest rates. Secondly, you've got inflation that everybody's talking about, and that's obviously putting huge pressure on businesses. You don't need to talk about that, everybody else is, so we've had enough of that. And thirdly then, I think probably most importantly, when consumer confidence begins to wobble, there's a lot of discretionary segments in the economy that begin to get very nervous, like hotels, restaurants, and those sort of places. But I suppose there's 3 points I'd make in the presentation, which will only last about 10 or 15 minutes, so don't worry. Stay where you are. Don't leave, please. The first thing is, when it comes to SMEs, everybody in Ireland always talks about how fantastic SMEs are, and we're in the business of financing SMEs, and we think they're fantastic as well. But it's interesting, in the last study, international study of Irish SMEs versus other countries, it was shown that they are significant underperformers as contributors to the Irish economy versus 31 other OECD economies. It's very strange because we always think we're an open economy, SMEs are very important to us. But in Ireland, funnily enough, we have successfully brought in a huge amount of international companies, and foreign direct investment is the key driver of the economy. And the SMEs, I'm sorry to say, despite brilliant SMEs we deal with, are underperformers for 2 reasons. Number one, they're underperformers because only about 6% of SMEs export, whereas in OECD about 16% of SMEs export. So as a result, the pace of growth isn't all that significant. And secondly, access to finance, which is, I suppose, where linked finance comes in. The reason access to finance is a real problem for SMEs, is because there's very little competition in banking in Ireland, very little competition in SME finance in Ireland. Essentially in Ireland, for those of you old enough to remember, we've probably had about 7 retail banks that have left the country over the last 10 years. Now, everyone might love to hate banks, but at the end of the day, you had, if you remember, Bank of Scotland, Danske, Rabobank, Anglo-Irish, Irish Nationwide, and now we're seeing the exit of KBC and Ulster Bank. And for Ireland, that's terrible. It's really, really bad because we're left then with, I'd almost say, 2.5 proper banks. Bank of Ireland, AIB, and Permanent TSB are getting used to SME finance, haven't been doing it very long. And as a result, the level of competition is low in Ireland for SME finance from the banks, and getting smaller, because you really need a vibrant number of banks to get good competition. And that heralds the growth of alternative financing from organisations like Linked Finance. You'll have heard of Bibi, Grenke, Capital Flow, these sort of organisations. And they've got to fight hard to get business. They're good for competition, they're good for the economy, because at the end of the day, we're left with 2.5 pillar banks, which isn't great for the country. So I think the SMEs need to be helped significantly when it comes to competition for their business, for their finance, and trying to encourage SMEs to invest in their businesses, to go international, to buy, be it capital or working capital. That's the first thing I'd say. Second thing is just a quick overview of what we're seeing in the economy, which is maybe of interest to people. Because when we hear economists or journalists talking about what's going on in the economy, it tends to be at a very macro level. We tend to operate on a very segment level, so we can see individually what's happening in different sectors. The one areas that have done very well over the last, probably this year, are construction, distribution, professional services. They've all grown very strongly. In fact, distribution, even during COVID, did very, very well. And you can see all the Deliveroo fellas. Well, for every Deliveroo fella, there's loads of other distributors that are getting goods around the country. So distribution has done very well. Manufacturing, for those people who switched, has done very well. And retail, for those retailers who actually moved online, did very well. The big watch outs from our perspective are, if we're dealing with companies that haven't really changed their business model over the last 3 or 4 years, it sort of sends a signal that they're not evolving. If they don't evolve during COVID, if you don't evolve during significant inflationary pressures or supply chain problems, you're probably not going to evolve when things are normal. So we like organizations that have moved online, in the service sector in particular. We like organizations that have used the COVID, if you like, to get their costs under control. And it is, again, remarkable the number of applicants that we get that say, well, my costs are where they were before and I'm happy with that. I'd encourage every organization to renegotiate everything with their suppliers, their landlords, etc. Interestingly, most people took the COVID opportunity to renegotiate if it was appropriate with their landlords, and then probably in the last 7 months have gone back to where they were in 2019 and 2020. Don't. If you've got a hybrid working, if you've got people that are working from home, but either way, in many cases, there isn't the same level of demand that's out there. There's too much supply in many cases. In warehousing, for example, we're seeing excess supply, office space, commercial rents. So negotiate everything. We like organizations that just don't go back to where they were pre-COVID. We like organizations as well that generate new revenue streams. Again, during COVID, migrating online was a big, big factor that we saw. We like those as well, and they've done very, very well for us. So that's what we've seen overall. But as I said, there's a couple of headwinds. We've got inflation, we've got interest rates increasing. As I said, the great thing about linked finance is we're not increasing our interest rates. All of our customers are on a fixed interest rate, and that'll be the way for the future as well. So you don't have that extra exposure that you'd have if you went to one of the pillar banks. Maybe just to give you 2 or 3 minutes on who exactly linked finance are, because I've been talking about stuff that's external to us. So we're, first of all, a peer-to-peer lender. What does that mean? Well, it means about half of the funds that we give out to borrowers come from retail investors. In other words, people here who decide, I want to help SMEs. It's a bit like a crowdfunding model. We'll take in their funds and give it to SMEs. Obviously, we assess every application that we get because we've got a credit department, and the head of the credit department is over the wall there. His name is Phil Casey. He's the best looking head of credit in Ireland, and he'd love to have a conversation with anybody. And it's good that he's available here, because sometimes you get these sort of places full of salespeople who are all fantastic, but this is the guy that actually makes the decision. So if you're interested in credit, he's a good guy to talk to. In fact, he's looking over here. There he is. So I'd encourage you, the Bank of Ireland will have a couple of fellas that'll try and sell you loads of stuff. Phil is the decision maker, and he tells you how to package your loans to make sure you have the best possible chance of success. What else do we do? So we're peer-to-peer, we're fintech as well, so we like to do as much of our business online. The reason we do it as much as possible online is to keep the costs down. But we also deal with partners, be they accountants or loan brokers, in order to make sure that we give our proposition to as many people as possible. We do loans between 10,000 and 500,000. We have probably given about 3,450 SMEs a loan at this stage. We're just up and running for about 8 or 9 years. So 3,500 SMEs have come to us, and we've got about 57% of our business that's repeat. In other words, the customers that come to us once, like us, and come back to us again. And we've 95% customer satisfaction rating, because it's important. The banks are bigger than us. We've got to be significantly better than them. And as a result, we're faster. We stand really for 3 things. Number 1, speed. A huge number of SMEs take a long time to decide, am I going to buy that? Am I going to extend that? Am I going to take on more stuff? Am I automate? Whatever it is. And then suddenly they leave the finance to the very end. If you go to the banks, it's fine. They're very clever people in the banks, but they'll take 10 or 12 weeks. We'll make the decision within 24 hours of you giving us the documentation. So speed, simplicity. A lot of our customers have had bad experiences with the banks, and they come to us. We also give great service. We've got people around the country that are available to talk to you at any stage. And if you're concerned about, God, you're an alternative lender, you don't have a brass plate like Bank of Ireland, AIB or Permanent TSB, we'd invite you just to talk to the SMEs that have dealt with us so far, because they rate us highly, and we've got to be better, as I said, in service than the banks. We've done about 200 million so far since we launched, and as I said, 3,450 SMEs have come to us so far. I speak to all the customers on a weekly basis that take a new deal with us that particular week, ask them how the service was, and our sales guys talk to all the customers that are coming to the end of their loans. And in the vast majority of cases, they say, it's a great experience, we've got a bigger organisation as a result of the funds that you gave us. We tend to give, on average, about 100,000. It goes up to 500,000, but we tend to give, on average, working capital loans of 100,000. We can extend it from 6 months to 5 years. And I think importantly from our own perspective, in order to facilitate that speed of service we talk about, we don't look for security. We do look for a personal guarantee because we back people. We don't look for security. So we don't get you to tie up an asset. We don't get you to spend a couple of grand valuing the asset to be tied up as security. We back people, we look for a personal guarantee, but we don't charge you for any security or anything like that. And that facilitates speed. In our fintech credentials, we use open banking, so the majority of our applicants now would go through an open banking process, which speeds up the process significantly, so we like that. And I suppose 2 products that we have. We've just introduced a second product recently. It's interesting, our bog standard product is a term loan, so you take 100,000, you pay it back over, let's say 3 years, you know exactly what you have to pay back every month. Fantastic, built for idiot product. I understand it, everybody understands it. The other product we introduced recently is called a merchant cash advance. Merchant cash advance, a lot of people in the industry know about, and a lot of people don't know about. Very briefly, there's obviously been a big shift to cashless society, and in a cashless society, we see more and more people relying on the revenue for debit and credit cards. So we have organizations, particularly in the customer-facing area like hospitality, coffee shops, places like that, where 80% of the revenue is now generated from non-cash means, so debit or credit cards. In order to jump on that trend, if you like, we're giving those customers the option of paying us back a loan of, say, up to 150,000 from their credit card and debit card receipts. Simplifies everything, pays us on a daily basis, and it's invisible, there's no administration. But the real catch is, no, catch is the wrong word, the real advantage is you pay basically on a percentage of your turnover. So if you think of a highly seasonal business, specifically an ice cream manufacturer or an ice cream retailer, in the middle of July they might be selling 10,000 of ice creams per month. That's the receipts that they get there, we'll take to pay back the loan, say 10% of the receipts that they have, we'll take. If by contrast in January they're taking 50 quid, I'm exaggerating a little bit, but 50 quid, we'll take 10% of that, which is a fiver, because they need the cash and we need to make sure they don't still have to pay a standard amount every month. Anyone in the seasonal business, this makes complete sense for. And we've had phenomenal response to it so far. We're doubling the number of loans that we do on a monthly basis. And I think it's already significantly developed in the US and the UK. We think this is going to be the next big thing in Ireland, and we can do that all on an automated basis. So the customer, you the client, doesn't have to get involved at all. So I suppose really in summary, a couple of things. First of all, it's a huge period of uncertainty. There are things that are moving in the right direction, such as we are lending more and more to SMEs. We increased our SME finance 90% last year, and this year we'll increase by at least 25%. So we're relatively new to the market, but we're growing at a rate of knots. We'll do about 45 million in loans this year. So very happy with the level of growth that we have. The real USP for us is simplicity and speed. You know, people are intimidated by long bureaucratic processes and the slow no, as everybody talks about. That's our enemy. We want to make sure that we ask customers for the minimum of documentation, but we need some. We'll typically ask you for 12 months bank statements, your accounts, and proof that you don't have any revenue issues outstanding, and that's it. We can make a decision on that basis. We can do that within 24 hours, so that's speed, and we have highly trained retail and finance professionals around the country that can deal with any needs that you have. And I'd say the last thing is, in order to make sure that Phil, who still hasn't joined us, but he's over there, that Phil and his team actually approve on the credit side couple of hints. First is setting up a relationship with a financial services provider is exactly the same as setting up a relationship with a person, be it a boyfriend, girlfriend, or whatever it is. It's remarkable the number of people that come along to us and they say, well, I only have one loan outstanding with Bank of Ireland. And then we look at the accounts and we say, well, there's loans all over the place. So be honest in your application. It just doesn't reflect very well on the beginning of a relationship with your financial services provider or a boyfriend, girlfriend if you start off with a couple of lies. It's not great. The second thing is get your costs down. Because too many of our applicants say, it's after COVID, I'll give the landlord what they wanted originally. No, negotiate everything when it comes to suppliers, landlords, etc. Diversify your revenue stream if at all possible. Automate it if that works. Digitalise your business as much as possible to get the costs down and to get new revenue streams. And then we'd be absolutely delighted to talk to you. Apologies, I had a presentation and I've completely ignored it, but I'm going to go to the very last slide. It's a very, very nice presentation. The last slide in the presentation, which is by far and away the most important, which is this. So apart from myself, we have 4 people that are just over on the left-hand side as I look in. Phil Casey, Head of Credit, David Green, Partnership Manager, Conor Curley, who will answer all your questions, and Amanda Germain, who's Head of Originations. And they're either sitting here or just over there, and they'd be delighted to talk to you. If you have any questions at all, love to talk to you, and thanks very much for the time.